a share. We're also keeping an eye on Deere, Federated Department Stores, and PetSmart. That's your Global Stock Watch. It is available only on Worldwide Exchange.
Well, Chinese shares staged a rebound after Tuesday's sell-off. Investors have ignored hawkish comments coming from Chinese Premier Wen Jiabao, who revealed that Beijing will use a full range of tools to rein in fast money growth in the world's fourth largest economy. Niku Harachi, Managing Director, K1 Fund Distribution Limited, joins us. Niku, good to have you with us. Does it sound like Premier Wen is preparing the market for another rate hike?
Well, welcome, and it's good to be here. Thank you for having me. Well, we do think that People's Bank of China are looking to increase interest rates by around 27 basis points. We think they're doing this in order to lower supply growth and the lending rate, and obviously also to stop the easy money and going into the capital markets. However, we, in terms of the valuations of the Chinese stock market, doing this in order to lower supply growth and the lending rate, and obviously also to stop the easy money and going into the capital markets. However, we, in terms of the valuations of the Chinese stock markets and the bull run, we don't think that this will have a long-term impact on the bull run of the Chinese equity markets. We still think that investors have too much money on the sidelines, and will continue to invest in the Chinese equity market.
Some people are suggesting the central bank should instead hike deposit rates as opposed to lending rates. Do you think that would be more effective?
Well, I think that would be more effective, but I still think just by hiking 27 basis points is not going to have a long-term impact. As I think in the short term, yes, and I also don't think that it will really increase the Chinese yuan. I think it will, maybe appreciate steady, but it won't have any very quick movements to the economy.
Nico, it's Michelle here in the United States. I was just going to ask you about that because the Premier says that he is satisfied with the pace of yuan appreciation, but how's that going to go down in Washington when we have this trade delegation going on right now? What do you think?
Well, I think that, obviously the UN and the US, they would like to see that an increase in the yuan, and they would like to do something about it, and they are suggesting that the yuan is being kept down synthetic. But on the other side, what is US and UN going to do about it? Are they going to implement or import taxes? I don't think so. And if they would do that, we shouldn't forget that China is one of the largest buyers of US securities, and they might start selling that.
So Nick, and what is your strategy at the moment? There may be concerns of a bubble, but look at the industrial orders data out of China, and there's no sign of a slowdown there really at all. And what are you doing with your money?
Well, right now what we are saying is that we would still suggest to invest in hedge funds, and as I said before, I think now is the best time of all. We are seeing such high valuations, and we do think that it's going to be a correction around the corner. We don't know when and how it's going to be triggered. We think it could be the carry trade, the housing markets, or even some geopolitical tensions. But if investors want to place their money right now, we would suggest to invest in Asian demand strategies, such as maybe phone companies or even properties, as opposed to the exporting sector.
Nico, Christine here again. When you look at A shares and how it's been trading compared to H shares, say, in Hong Kong, there's a big discrepancy going on right now. Do you expect the gap to narrow?
Well, we certainly do, and we think that there will probably come a lot more inflows into the H shares through equity funds, and then we think that the gap will narrow between the A and the new H shares.
What exactly do you do with your money in Hong Kong then? Do you play just the H share market, or do you look elsewhere?
Well, we as K1, we don't invest directly into equities. We do look only at hedge funds, and we were looking at some long-short equity managers with I would say with a bias towards shortening stocks. And that could be across the board, Japan, China, and Hong Kong.
Okay, Nico, we'll have to leave there. Thank you very much for being with us. Nico Harachi, Managing Director, K1 Fund Distribution Limited, talking to us live from Hong Kong. Coming up next on Worldwide Exchange, looking at the US CPI data coming in lower than expected. What's that going to mean for your money and global interest rates? We'll find out after the break. Stay with us.